Testing, 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 testing. Perfect.
The broadcast is now starting. All attendees are in listen-only mode.
Well, good afternoon, traders. How's everybody doing this afternoon? Before we get started, as always, we know the procedure. If you've been here before, we just need to do a quick test of sound and picture. If you guys can see the screen and you can hear my voice, please give me a Y in the chat box so that I know that you're here loud and clear, and we can get started. Excellent. Appreciate that, everybody. First and foremost, thank you for your attendance. This is a webinar I've been actually planning for several weeks, and we're going to be doing things very differently today, which is, it's exciting for me because I get to kind of step into the realm of doing what I love doing, which is strategy design and architecture. And we're going to basically be focusing the entire event on a full turnkey, full-blown trading system using the SDVolumeZones. So, and the reason for that is I'm a supply and demand trader, and I like to share experience where I can, and hopefully save you years of trial and error. And hopefully at the end of the event you can walk away with some golden nuggets and some key takeaways that you really value. So first, there's a couple housekeeping rules. We do need to cover a quick disclaimer. We'll touch base on that in just a moment. And we are recording the event, so if you can't stay here for the entire webinar, if you have to step out, we are going to send out a recording with all the links to any of the information, promotions, etc., and you'll be able to follow up with that after. And if you have questions, please type them in the chat box. I will be getting a bit technical today, so that's part of why I'm just saying this up front. The nice part about it is that I'm going to spend some extended time at the end of the event going over the questions. So if I don't see them right away, please note that I will get to them at the end, and we'll make sure that you get your point across. Okay. So without further ado, let's get started. Maybe you guys can tell me a little bit about yourself here first. I'm going to just put the disclaimer up on the screen here. There are risks associated with trading. Obviously, we've all seen this before, but please take a clear look at this and make sure you understand the risks associated with trading before you get started. We're not here to provide buy or sell advice, especially today when I provide a trading system. This is for educational purposes only, so please note that any documentation or recommendations towards the use of this system is strictly for own resources and information. While we're putting this up on the screen here, maybe if you guys can just shout out if you're experienced or if you're a new trader, or if this is your first webinar, or if you're a regular. I do see some familiar names, but I want to know where you are at, and I want to know whether or not this is something that's completely new to you. Supply and demand trading is by far one of the core elements of any financial market, whether you're a stocks, futures, or forex trader. Very important to know supply and demand. We are pillars in the industry with regards to supply and demand. We spent years designing architecture around levels that we'd like to say flagshiped at a trend in the business. But nonetheless, if you're new to trading, just type new. Okay. If you're struggling, put in that you're struggling. I'd like to know that honestly. Hopefully after today you can see some reasons why that doesn't have to be the case. For those of you that are experienced, if you guys are experienced and you guys bring your own knowledge to the table, this webinar is going to be awesome. I'm excited about it. So I do see some familiar names: Bob Rosk, a few other guys in here, and Cord, Caesar, everybody that I've seen before. Oh, Steven's here. This is going to be a great lesson for you, Steven. I've been mapping out a system that we're going to be teaching here as a takeaway with the software that I think you're going to like, and so forth. So let's get started, guys. Credentials and bio. I always like to lead with that. It's important you know who's behind the scenes here, so you're not just thinking it's just one guy on a mic with a webinar in a trade room. I've got a lot of people moving and grooving here, and we like to serve as best as possible. The thing about supply and demand is there's a lot of terminology error. Right? A lot of people think supply and demand is support and resistance. It's very much different. A lot of people confuse order flow with volume. A lot of people confuse volume with order flow, and vice versa. And a lot of people confuse supply and demand with order flow. Right? There's a big difference between these concepts, and we're gonna map this out here quickly. The main tool, or the only tool that we're going to be discussing today, is the SD volume zones. And the reason we're going to discuss the SD volume zones is, in my opinion, it's one of the most important tools I've ever designed. It took a year to map out the architecture of just the code, and it took 27 versions before we brought it to market. So the reason why we spend so much time on it is because it's very, very advanced in terms of what it does, but at the same time it's extremely simple to trade. And that's the best part about what I'm going to do today, is I'm going to show you how to take a strategy that's got a complicated aspect to it and make it very simple to map out rules around how to be very selective with which trades you take. In fact, I'm going to show you the #1 reason why a lot of supply and demand or support and resistance traders fail. And I'm going to show you how that doesn't have to be the fact. I'm going to show you the rules to eliminate those losing trades. And we're going to spend a lot of time just looking at rules on the strategy. I've got market replay loaded. We're going to go bar by bar. We're going to execute a trade. We're going to do the whole fun stuff, and it's going to be exciting. It says full SDV trading system. So what I've done, and I'm not going to go into the details of this now, but I've basically built out an entire trading system for you. And I'm going to give this to you for free should you decide to use the SD volume zones moving forward. It's got rules to the system, the setups, the money management, and ways to increase probability on the system. And we're going to talk about each and every one of those moving forward. But before I do that, I need to go over the tool that's basically running the strategy so you understand it. That way, when we get into terminology and some examples, there's no confusion. We'll do the demonstration on a futures market that most of you guys are familiar with called crude oil. I think everybody in here has heard of crude oil before, and we're going to use crude. Now, it does apply to Forex or stocks as well. It really depends on you. If you're a day trader, perfect. If you're a stock trader, excellent. If you trade Forex in the overnight, it doesn't matter if you scalp it or if you swing trade it. These rules are completely transferable across any market on any time frame because it's directly related to supply and demand, price structure, and the daily auction areas. Okay, so we're going to look at taking how to map out your entire trading session or your entire trading day and separate the market into a grid so you understand where supply and demand is going to, I guess you would say, work versus not work. And even if you get tricked and basically tested by the market and basically to see if you're willing to break the rules, we're going to show you that even some winning trades we're going to factor out because it doesn't meet criteria. So we're going to talk about being very selective, teach you how to be a sniper. Now, we've recently just switched our pricing models as an entire company because we're expanding operations. And so we do have different pricing and discounts being offered. So if you're new here, great. We've got some alternative options for you. If you've been here for a while, this might be a great time to take advantage of something that you didn't before. But let me show you why it'd be worth your time to stick around to the end. I think it's going to be good for you guys. Okay, so let's talk about real quickly. We've got a team, and my name is Sean Kozak. I'm the owner of Golden Zone Trading. We've got Ben on support. Michael and Raul head our trading rooms Monday to Thursday. We've got one of the best programming arsenals in the industry. We've got several programmers that we work with, so we don't just rely on one because we use different companies for different reasons. Some programmers are very good at other things, and some are not. So we use specific tools and we use specific people for specific reasons. Ashley is the one who's putting on all the marketing events and these kind of webinars. So if it wasn't for our team combining together their resources, we would not be here today, and we definitely would not be able to provide service for you. So we must show gratitude to that, I guess you'd say, confluence amongst people. So let's talk about order flow. How many of you guys have ever seen a chart that looks like this before? Give me a Y. Richard says yes. Everybody in here most likely has heard of a chart that looks at order flow. This is another word for a footprint chart. We call it order flow, print, aggression, whatever you want to call it. All it does is it basically exposes order flow data inside your candles. Okay. Today's discussions are not going to be about footprint charts or order flow charts. However, this is one way traders look at supply and demand. Okay, to me, this is an order flow chart. This is not a supply and demand chart. Therefore, you could identify supply and demand here, but it's done in a very different way than I'm going to show you today. How many of you guys have ever heard of volume profile? You guys ever seen a chart like this before? Give me a Y if you've seen it like this. Okay. And I like to engage the audience. I think that if we're going to do a presentation, I want to make sure you're not sleeping there, right? And I drink a lot of coffee, so you might see me get a bit hyper here, but that's okay because I love doing this stuff, especially supply and demand. It's my passion. Okay. So volume profile is another way that traders look at acceptance or rejection. Some people would say, well, isn't that where the market says there's demand or supply? Some would say yes, some would say no. As a supply and demand expert, which I am, I would say that it is not an accurate way to read supply and demand. Okay, so the two charts here, they're very good ways to trade. So that's the caveat, right? There's very, very high probability and very successful and wealthy traders that trade order flow. There's very successful and very, very profitable traders that trade volume profile. And a lot of traders mix the two. But this is still not supply and demand. We're going to make things easy, okay? Because most traders, I had a couple guys in here that says he's an experienced struggler. Excellent. You cannot change unless you honestly admit where you are. First and foremost, I'm a visual learner. I'm also a visual teacher, so I try to break things down in ways that we can identify clarity, and then we'll move into the technicals. So this is an example of a demand zone. Now, demand, okay, is where buyers are in the market. Okay, we want to be buying in demand. When there is said to be demand at certain price levels, that's where we would expect prices to rally. Professionals buy in wholesale areas. Supply is the complete opposite. Now, what I want to explain here is you'll notice that there's a green zone and a red zone, right? Inside those zones, there is also volume data. That's the concept around the SDVolumeZones. Okay, so what we've done is we've taken the order flow and the volume charts that are on the left that we just explained are very valuable information, and we've designed algorithms to identify pattern recognition that looks for areas where supply and demand are being proven by volume profile breakouts and order flow breakouts. And we wrap levels of demand or supply around them so that we can identify where professional and buyers and sellers are located. Now, the issue, and there's always an issue whenever you design software for strategies or trading, is that if it was working every single area or every single level, it'd be a license to print money and we would never be here, right? Most traders know this. That's why automated strategies never work forever. They always need to be modified, or they always need to be tweaked, or they need to be, adjusted, right? But when you have a rules-based strategy, you can adapt to the market. And this is what I'm going to teach you today. I'm going to teach you which zones to buy or sell and which zones to just leave alone. Because some are amazing trades, and some will just get you stopped out every single time. And this is where I get to share my experience with you, because this is what I've spent I started in 2008 in the market crash, and I'm actually an old school online trading academy graduate, which we all know Sam Seiden is the head of education. I learned options with Eric Kozak here at the XLT programs there. So they are a supply and demand education company. So my background comes from supply and demand. The only difference where I came from is I studied supply and demand with volume and order flow, and over the years worked with programmers to become what we consider a market architect. Okay, so the goal here is to show you that over 10 years of market exposure, looking at charts. Joel says he's an OTA student. Perfect. This is going to make your life a heck of a lot easier. OTA is a great school. They just do things very differently. They're not more on the technical software application side. They're geared more to financial education across the masses. Okay? We're technical rules-based traders. We teach strategies and we teach application. So let me kind of transition back to the topic. I'm going to show you which zones are going to work and which zones have the probability of not working, so that we only take the trades in the right areas, okay? Which is really the name of the game. Right now, who in here Can you just be 100% real with me? Who in here right now is in a position where if I can show them how to make more money, you will act on it? Give me a why. I'm being very serious when it comes to this because supply and demand is my specialty, so I'm going to show you how to do that. If I can show you how to make more money, are you willing to learn and make a few changes? Got a lot of yeses in here. Okay. So I'm going to spend the next hour and a half giving you every secret that I know about how to identify supply and demand properly. And if you just follow this guidance, you have a very, very high chance of succeeding using it. Does that mean that you have to only use supply and demand? No. But if you follow what I'm about to teach you and you use it with whatever else is working for you, then you're going to capitalize on extra credentials or extra probability, if you will. If you're a struggling trader, what I suggest is you stop doing everything that you're doing right now and become open and willing to make a change. You have to be willing to do that. Okay? If you're struggling, seriously struggling, there's a reason for it. What you're doing is not working. So let's stop it and we'll restart. Just hit the reset button and basically learn a new method. Okay, so let's go in here and let's get right into this. The SDVolumeZones allows us to forecast trades in advance, looking at order flow imbalances with supply and demand and volume profile. These three bullets are very, very important. It says always leading. I am a trader who has learned over the years that being proactive is better because it allows me to plan what I'm about to do in advance so that I'm not acting on the fly, making rushed decisions. A rushed trader is a careless trader. Somebody that has to act instantly or has to make a decision that cannot plan what that decision is gambling. May get lucky once in a while. Heck, I got lucky the other night. Made a couple $100 on the slot machine. That doesn't mean I'm a professional gambler. That just means I got lucky. Right? Professional poker players, on the other hand, different. They study the game. They study people. They understand the odds. They understand that you're playing against other people. There's a difference between poker and roulette. Okay? Trading is just like that. When you plan things in advance, you have the ability to become what we call a risk manager rather than a trader. And that's our goal, is to become a risk manager. So we're going to use supply and demand and volume and wrap zones around areas so that you can become the best risk manager possible. Okay, now we use certain aspects of price action on the fly. So what we've done is we've got colors in our price action bars that are going to help prepare you to even know further in advance when to expect to start planning. That's why I love this software so much, is when I was designing it, it was because I was drawing my levels manually for years. And I said, nope, this has got to change. I'm going to design software to do what I need to be done that I can see and I can plan. So before you go to start planning where you're taking a trade, our price bars will basically highlight when it's time to get ready, which is an extremely good asset to getting organized. Okay, as I mentioned, it's transferable, so it doesn't matter the trader that you are, it just matters that you learn the method. Now, I do want to explain where prices are expected to turn. Okay, there's a reason why price reverses. It doesn't just start trading the other way because it just does that, right? You have to look at this as a very, very clear objective to how the market works. Okay, so I'm going to grab a cursor. We're going to do this here, and we're going to talk about this. Think of this entire picture as a business. I'm going to put B up here for business, okay? And it's very important that you understand that trading is a business, but most people don't understand how to identify how to run that business. That's the difference, okay? So let's just put a little white line in the sand here, just like this, okay? And let's say that anything below here is buying territory, and anything above here is selling territory. Okay? If you knew that you owned a business, whether it be shoes, a restaurant, or anything like that, okay? Maybe you own a retail clothing store, you own a food business, you own a real estate business, whatever the case may be, And let's assume that I came to you as an expert who's very good at your business and said, listen, as long as you look at your business like this, and you always buy when things are cheap and sell when things are expensive, you will be profitable. If I said that is the #1 way for you to succeed, would you do it? Give me a why if you would do that. If I came to you as an expert and said, listen, stop everything that you're doing and listen very carefully, I'm going to maximize your revenue. Of course. So if we have a whole bunch of people willing to make more money, why do we not? That's the question. Why do we self-sabotage, right? That's the real question. It's because we always want to be the one who reinvents the wheel. We never want to follow someone else. We always want to be the leader. It's ego, and it's greed, and it doesn't make you money. It makes you stressed out. Can we agree on that? If you're willing to just listen to someone else that can show you how to do something that is designed for success, most people will dance around trying to figure out why they're not doing it because they're doing everything else. So what I'm here to tell you right now is that up here, that's professional sellers. Down here, that's professional buyers. So if you are a professional, you have to short the market up here, okay? Who do you think is taking the opposite side of your trade? Someone that doesn't understand wholesale and retail price levels. Someone that doesn't understand how to run their business. Because on an intraday basis, or even on a daily basis, or on a week, it doesn't matter the time frame. What matters is that if you're a professional seller up here, you have to sell short into the open market, and it has to be traded against a buyer, a willing buyer. Well, if we know that this is expensive price levels, who do you think is buying up here at expensive price levels? The inexperienced business owners that will lose their business. You ever get those friends, you maybe high school reunions or college reunions, and they get around and they start talking about how they're gonna invent this next best invention, or they're gonna open up this new company. They've seen this idea, and it's all a bunch of hocus pocus. And yet you're sitting there and your business is doing really, really well, and you just don't understand their mindset and their process. They don't understand where they're coming from. I have a couple friends like that. Every time they try to talk about stocks, I bought these penny stocks here. I think I might invest in cryptos. I hear everybody's doing it, and those are the guys you're trading against. Okay? Let's get very clear on that. You have to pick and choose who you want to be. You're either going to be the professional or the guy gets taken out. So what I'm going to do is I'm going to explain that our zones are designed to show you where to take the trade, the location to enter trades. So a lot of people want the red light, green light strategy. Just show me where to buy and sell so I can make money. That's the question, right? Well, if I just said here, take this software and just buy and sell every single zone, you would lose all your money. Because it doesn't tell you anything about market context. It doesn't tell you about where you are on the entire range of the market. It doesn't tell you the actual location of the auction. What we're going to do is we're going to take this concept that I just spent some time talking about, and then we're going to apply it to a daily environment. So like today, we'll look at what happened today in crude oil. And we'll talk about which trades are good trades versus which trades are bad, so you can identify that mindset moving forward, okay? So, another thing I want to do is I want to explain quickly how the zones are formed so you understand what they're doing. In order for a price zone to form, supply or demand, okay, it has to start with something. So step 1 is black bars. Step 2 is thrust candles. One is the tug of war between the buyers and the sellers. So an environment would be here. Another environment would be right down here. Another environment would be up here. Okay. Now let me explain what the black bars are. The black bars are where our algorithms or the zones are basically going, okay, step one is there's a tug of war between buyers and sellers. Remember that first slide I talked about with the order flow? We're looking inside and we're saying, okay, there's order flow and volume going back and forth, and it's also looking at the size of the body versus the range and the average true range. There's a lot of stuff going on in those price bars. And then what's taking place is that as soon as we identify that there's a battle going on, because that's what really is always happening. If you've ever been to a car auction and you got people fighting over the really good deal, that's what trading is about. There's a liquidity auction always taking place, and eventually one side is going to take control and push prices lower or higher until the other side takes control. That's what an auction does. Okay? So what we're going to do here is we're going to explain, we identify mini auctions within the daily auction or the weekly auction. Whenever you're looking at your charts, these black candles are identifying that mini auction. Okay? But what has to happen is price needs to be identified by the direction of the winner. We need to see, okay, who's winning the battle? That's the question. So in a situation like this, you see how it's a highlighted red bar? After every battle, there's what we call a thrust. And that thrust tells us who won the battle on volume. So this is what we call a red thrust bar. And at the close of this thrust bar, this zone plots, and it forms all the way across here to the hard red edge of your chart. So it doesn't matter if you trade all the way down here and come all the way back up, that zone is always there. Why would we want that zone to always be there? Because it tells us a story. It tells us that at this price level, based off this battle in time, when we were at those prices, the traders that really actually control the market prove that supply is in control at those price levels. So that tells a story. I want to know what the bigger traders are doing at price levels, because all we're ever doing is we're looking at time versus price. You can use all the fancy supply software in the world, our indicators, anybody else's, but you're really only looking at a scale of time and price. It's how we break all this data down that makes it fancy. Okay? So let's go to the bottom. We get a down, we're moving down, we move sideways, we move down, boom, we get a war going on. Sometimes these wars are one bar, sometimes there's 2, 3, 4, 5 bars. Normally we want to see 1 or 2 candles. That's a really good odd enhancer. We'll talk about that after. But we want to see the battle. And then you'll see how this one is a green thrust bar. At the close of that green thrust bar, this zone prints demand. And then price traded up, down, sideways, boom. It came right back to where that battle was. And price shot out of there. Now this is all relative to whatever time frame, whatever market, it doesn't matter. All that it matters is that you'll notice that this one would have been a demand zone and it failed. There's a reason for that. I want to teach you how not to take those trades. That's the strategy today that we're going to talk about in a lot of detail. We're going to talk about how to take the zones that have a high probability of making money versus how to take the zones that are going to get you run over, like the inexperienced trader that doesn't know how to run his business. Are you guys with me? Give me a Y if you guys are all on the same page. You want to make sure you're all with me here. I bought one of those Nespresso coffee makers. Do you ever heard of those before? Fantastic. I think it's the best coffee I've ever ate in my life or drank in my life. George Clooney says it's not coffee, it's Nespresso. Anyways, back to the topic. So when we look at the zones, and the reason I just want to talk about this last slide is inside these zones where we're creating levels of retail and wholesale information. That's what this really is. This is a supply zone story. Let's just talk about that. I always like to do that. I always like to tell a story. Demand zone story. Okay? Now, inside each level of supply or demand, we populate what we call volume. Because we already know who won the thrust. That proved the breakout. That proved the breakout of volume. That also proved the order flow, which side of the auction won. Right? We know that this is a red thrust bar here. And at the close of that bar, you'll notice how price stayed inside of it. It's because it was a very tight battle. Okay? And what we want to do is we want to talk about this, and we want to explain that we need to have a little bit more detail in order for us to become what we call a sniper. If you know in the Army, a sniper isn't a part of everyday operations. They sit really quietly on the hill, and they wait for that perfect kill shot, right? And what they do is they sit there for days, if not weeks, before they even engage. There's a lesson to be learned about that patience and discipline, because we're going to use volume to be a sniper. We're going to look inside that story to say, okay, if I know that I'm supposed to be a professional business owner in the financial markets and my job is to only buy things at low prices and sell things at high prices, I want to know exactly where I want to be buying and selling so that I can fine-tune my risk and be the best business owner possible. I don't want to just own the corner store. I want to own the best corner store that everybody comes to because they love my store. That's the goal here. We want to become the best. If you're not willing to become the best, you'll end up taking shortcuts, and then you'll end up losing money. And the goal here today is not to sell you an indicator, it's to show you how to make money. Okay? So, I want to talk to you about inside the volume, there's a story of volume. And each volume has terminology. There's what we call a point of control, a value area low, a value area high, the entire profile, and we call the volume cluster. Now, I'm not going to go into too much detail on all of the terminology today because I don't think it's necessary. All that's necessary is that you know that inside each zone, we have the depiction and the transparency to tell a lot more than just which side of the auction won or lost. Okay? So, let me kind of explain what has to happen before you take any trade, and then I'm going to spend time going over a trading system. We're going to map out the rules. These are the exact criteria for entry, exit, everything. Okay? Most webinars won't do that because they want you to buy a big package, or they want you to come in and, test this out. I had a discussion with our guys in our trade room and a lot of our customers, and we did a bunch of surveys. We had 800 applications that basically came in. We did a survey for a month, and ironically, the consensus is that most people want to use all of our stuff if we just show them how to make money using it. So the only way that I can do that is to show you how to trade strategies. Would you guys agree that that's more important than just buying an indicator? Is using that indicator to make money? Give me a why if you agree with that. Because we're going to focus strategy concepts on every webinar moving forward. Every single trading strategy or indicator you see come out the gates is going to have strategies attached to it. Things changed. And this is exciting. Okay? So, the first step in any strategy is you need to understand which side of the market you are trading on. Now, that doesn't necessarily mean a directional trader. You might be in an oscillating market. You still need to know where you're taking a trade. This is what's really important. If you are only directionally trading the market in trends, that's tough. Okay? Not that you shouldn't. It's just you have to understand that sometimes the markets are not directional. Sometimes they're oscillating. Let's just use, say, 50-50. I know it's not 50-50, but let's just say that you have to understand that if you're going to run your business, that's like saying I'm only going to open up my business from Monday to Wednesday, but I'm going to close the doors from Thursday to Sunday. Exactly, Thabby. So if you're going to run a business, why would you not want to operate at optimum capacity? You have to have the ability to be dynamic. Most traders only focus on one. Not that that's a bad deal. It's just that you have to know when that is then. You have to say, okay, because some businesses are designed only to operate at certain times of the day or certain times of the year or the week, etc. But if you're trading professionally, supply and demand gives you the opportunity to do both. And I'm going to explain how that's possible today. You need to have permissive action. You need to know if I'm going long or short, okay? If I'm going long or short, what are the exact rules for me to take a long trade? What are the exact rules for me to take a short trade? What are the rules-based reasons that define the logic of my entry I can't just buy or sell the market. I need to have permissive rules. Okay? Once you know you're going long or short, and you know the direction of the market you want to be trading on, you can then move down to your execution plan. You can start planning your reward to risk. You can start planning your position side, where you're getting in and where you're getting out. That's always third, guys. You never start with that. If you don't know this and you don't know this and you're just always starting here, most of the time you're not being proactive, you're being reactive, which is exactly the opposite of what we're going to do today. So you always start at step 1 before you go to step 3. Step 4 is you're in the trade and you're going to journal that trade when you're done it, because it's always good to follow up with whether or not you followed your plan. Okay? Now this is just an overview. This is not the rules to the strategy. This is a roadmap to a trading approach. This is what we call a framework. Okay? This is a framework. And I believe, truthfully, that this framework applies to every trading system ever designed. And I'll explain why. I started building algo systems a few years ago and tested hundreds of systems, and they all follow the same framework. Pick a direction, define a rules-based approach, identify execution and entry and exit with your triggers and your rules, and then manage the trade. Okay? Take a screenshot of this, will you? There's an opportunity at the top right or top left or the little screen save button. Give me a Y if you have it before I change it. You'll have an opportunity to go back and watch the replay, but if you think this is valuable, you can print this out, put this on your desk. You can use this for trading. My gift to you. Okay, so this is a framework. So this is what we call a mini trading plan. It's not the only trading plan. It's the starting point to a trading system, if you will. Okay, and we're going to take this framework and we're going to apply it. We're going to apply it to supply and demand zones. Okay, so let's go in here. Everybody's got it. If not, you'll get a chance to take a screenshot of the video. Let's go in and talk about the auction strategy that I've designed. A lot of this went in from years ago when we started designing the actual software itself. So I have a couple questions, some housekeeping questions. How many of you guys in here are okay with me getting a little bit technical? Are you guys okay with that? I don't know your experience levels. I know some people, they get bored real quick, or they just want everything done for you. But in order for me to be real with you, I need to get a little bit technical here, okay? Because trading is a bit of a technical industry, and when you define a full-blown system, you need to get a little bit technical, okay? So first, let me just explain real quickly. Okay, let's do this. So I'm going to basically explain that what you're seeing here is a chart of crude oil. I've got it on a 44-44 volume chart. Why did I pick that? I don't know. 4 just felt like a lucky number. It may not be a lucky number. We could do a 3-3-3. I could do a 15-minute chart. I could do a 5. It doesn't matter. I just picked any number under the sun. Okay? And the goal here is to show you, first of all, real quickly, the way we control the software is through a drop-down interface. So anybody that's new in here, the whole design, any of our software that we use inside of our business is about ease of use. I truly believe that if we're going to be doing things in the live markets, you need to be able to act quickly on decision making. It is momentum. Yeah, it is. It definitely is. Now you're going to notice there's a whole bunch of different sections in here that control the software. This is all explained in our user manuals and our video training. Okay, so whenever you invest in these tools or you trade with us, the training is extensive, which is nice because you're not just getting something out of the box and trying to figure out how to use it. Now, for the most part, I'm going to go fairly quickly on some of this stuff because I want to get into the actual strategy. If you have questions or if I go too fast, just type them in and I'll go over it. Okay, so today, let me just kind of go in here for a second, and I'm going to turn what we call the curve off. The curve is a Fibonacci grid that's on the right-hand side. You'll see I just turn it off. And I'm going to basically delete this very large supply zone that was created off of the open, so that we can get a little bit of a cleaner view. Okay. Now, what I'm going to do is I'm going to turn off market structure, and we're going to start with just price action and zones. Okay. So if we look at this, okay, if we look at this, you're going to notice that up here, oh, that's not going to work. Let's just go in here and put supply. I'm going to go in here and change the font on this, guys, so that we can see things moving forward. Font. Let's just do here. Let's just do, I don't know if that's going to apply it. Yeah, there we go. That's better. Save that as a default. Perfect. Okay. So this is supply. Okay. And this is demand. Real simple. The only issue here is that if I go into the actual software and I put all the previous levels, you're going to notice that there was also a level of supply that was here that didn't work. So the big question here is, why did this one work? And why would we want to maybe consider this or not consider this versus this one? Because that's the difference between you walking out the gates and making money using the software or not. We can all have a really good signal from time to time and hit a big trade. It's all those other times where you feel that you can trust something, you go to execute it, and it just keeps hitting your stop, and you're like, man, like, what's going on here? I've been there. I get it. It's no different than up here. There was a previous demand zone. Why did it fail? Why did this one fail? Okay? These are the things we need to map out right now. And the only way to do that is to define specific rules in order for you to follow. If you don't follow rules, what happens is you break them. Right? If you don't have rules and you just make your own, and if you don't know if they're right or wrong, then you're left guessing again. So what I'm going to do is I'm going to turn off broken zones. And I want to explain that inside the volume right here, so we got profile features, I'm going to turn the volume cluster off. The only thing I really want to do is I want low volume nodes, and I want the profile itself. And we'll get into a different discussion if you're in our trading rooms or you want to know what low volume or high volume is. Low volume is the point inside the profiles that where the zones are created that have low volume. Okay, you see how these low volume nodes are here and also up here. Could be down here, but I only have them set to the nearest 2. And this is basically, it tells the story. Remember we talked about the story inside of the levels of supply or demand that basically tell us whether the market was accepted or rejected. And what happens is when price comes to low volume, it's normally going to be rejected because low volume rejects prices. That's the auction. High volume acts like a magnet. Low volume acts like a deterrent. It just pushes prices away. Or price will just blow right through it real quickly to go to next high volume. Okay, so we use those to be the sniper. Remember I mentioned earlier, is like if we're going to plan the entry in step 3, I want to be a sniper. Step 1 and 2 is the rules. Step 3 is where do we actually place our order. That's the key. So let's go in and map out some stuff here, guys. Let's go in here and let's talk about this. We're going to get a bit technical, so I'm going to try and slow it down here a little bit. And so what we're doing is we're using market structure, the high of day or the low of day, which we would basically be able to map out the context of your auction on a daily basis. So sometimes the high and low of day can be easily defined. Give me 1 second. I'm just going to close the door of the office, you guys. Sometimes when you have a clearly defined range in an oscillating market, we can see the high and low of day clearly. It just goes from point A to point B, back up and back down. We can map out the high and low of day in an oscillating market. In a trending market, we never know where the high or the low is going to be because it hasn't reversed and proven that yet. Is everybody with me on that? That's very, very, very important. Give me a Y if you follow that concept on its own. I don't want to go too fast because these are going to build on top of each other. Okay? So the goal here is we only want to be buying the market in wholesale price levels, so demand zones, with market structure on our side and wholesale auction theory on our side. So there's two things there, or three things, really three things. We need demand zones when the market is favoring demand, and the daily auction location, so where we are in the overall picture of things in the marketplace, is on our side. There's three things there. Okay? Same thing with this. Let's do this. It's just reversed. We only sell the market in retail price levels. So that's supply. So we need supply and demand, right? When market structure is on our side and retail, so we're on the selling side of the auction. Wholesale up here, retail here. These are just the system rules as an overview. We're going to get into the specifics. This is important. When the high of day and low of day are not clearly defined, we must use market structure and the curve. The curve is that Fibonacci grid that I removed at the earlier part of the webinar. I'm going to just explain that. Market structure is here. Understanding price action. And curve is here. That basically maps out fib grids on each market structure swing in the market. Okay, so this is where we're going to build. So like I said, we're going to get a bit technical, but that's how you make money. You got to be technical. So this is important. Let's turn this to, oh, that's the wrong one. We don't want that. I'm highlighting colors because I think certain colors need to be basically standing. Perfect. So what I want to do here is I want to basically identify. Let me just make sure everybody can hear me and see me okay. I don't want to start until you guys can hear and see me. Excellent. Thank you for your patience on that, guys. So you can only trade, and this is, let's go back to this one after. Let's just put a little asterisk on this one, and we'll remind us to go back to that one after. Okay? Because I don't want to talk about that until you know where you can take the first trade before the second trade even matters. Okay? So let's start talking about where we're at on the grid first, and then we'll get into the rules. Okay, so if we came in this morning, and this is this morning, at 9 o'clock off the open. So let's just draw a little line here. Okay, that's the open. That's where we're sitting. And the goal is, okay, well, I need to take a trade. And this applies to any market, any time frame. All that matters is that you understand what you're looking for. Okay, so we came in off the overnight and the Globex here. We can see that price, what is the difference between the light green, red, and the dark green candles? Yeah, we're going to talk about that, Terry. So as we talked earlier in the webinar, these are thrust bars. These are thrust bars. Okay. If I go in here, I put broken zones on. There used to be a demand zone here. That demand zone was created at the close of this thrust bar because there was a big battle here. 1, 2, 3, 4, 5, 6 black candles, green thrust. At the close, this demand zone formed. Okay? Does that make sense, Terry? Down here, regular green candles, regular green up or down, there's no battle. They're not coming after a black bar. The only time you're going to get a thrust is if it's coming after a black tug-of-war bar, because if you don't have a battle, there's no need to prove who's winning the auction at those areas. It's got a volume profile and an order flow algorithm that looks at that average true range of the market over X number of days, and it just gets pretty detailed, but for the most part, we'll keep it simple. And we'll just talk about the strategy for now, and we'll show you how to use it. So the goal here is to say, okay, well, we need to identify the auction, okay, before we identify the direction. So at the time, this is the low, right? And this is the high. Let's map it out. That's so far the low of day. Now, one could say that, well, we don't really know that's the low of day yet because it hasn't really rallied. We haven't really formed major lows in the market, right? We haven't really formed any areas that are, I guess you'd say have proven themselves. But one could say, well, we came up and we made a higher low, and it didn't break down, and it's starting to make a higher high. We're transitioning here. So this could definitely well be defined the low of day, right? Well, let's go in here for a second and say, okay, well, if that's the case, we've just defined the business. Think about this for a second, guys. It's very important. We've just defined our environment for the day. So if we go to the store and we know that $10 is really expensive and $3 is cheap, we've defined the range of spending. So what we've done is by doing this, they've set the range at this time. That's very, very critical. So right now, this is our auction. Okay? Think about this. This is the auction for a second. Now, remember I said at the beginning of the webinar, if I just came in here with a lot of experience and told you that you only want to be buying okay. Yeah, we only want to be buying here, and we only want to be selling up here. Remember I said that? I said we only want to be buying and selling at the right places of the auction. How many of you guys understand that? So let me just kind of map this out. Give me a Y if you understand this so far. You only want to be buying at certain auctions. I'm going to grab a green. Let's grab some green here. Okay. This is about market context. This is not about where you're entering yet. This is about permissive action. Remember I said we need to have step 1 and 2 done before you can ever go to step 3 in every strategy that you trade? Well, a lot of people don't understand how to cut their losers out of the trading systems that they trade. They just simply expect that, oh, if I just add another rule, it's going to make the trade system better. Well, adding more rules to a trading system actually ends up making it harder to become profitable. What really needs to be understood is where your strategy is likely to make money. That's the most important part, especially if you're directionally or non-directionally trading. We usually don't know our entry is perfect until later. Exactly, Thabi. You never do. So you have to think about where would your entry have the likelihood of making money based off of, well, think about this. It's all about an auction. Never mind your strategy, never mind the Renko bars, or never mind any. When you sit down, Goldman Sachs or JP Morgan, they have large books of orders. That's why they have the VWAP. The VWAP is another way of identifying the auction. Above or below VWAP is another way of separating the grid. High or low, higher day, low day, it's the same thing. You could have the midpoint of a day define the auction. Okay? But you can't really do that until you've either set lows or set highs for the day. Well, if you're day trading, you're going to be able to see those fairly quickly because you're either going to get a major reversal on one side of the market or not pretty quick. Okay? And if we know this, another way to do this is just take the fibs, map it out. Anything below 50% is buying, anything above 50% is selling. That's what this is all about. This is about separating grids in the market. That's how the fib retracements are designed. There's a lot of mathematics and geometry behind some of these concepts. I just like to simplify them and make it business orientated. If I'm a business owner, I want to buy things when they're cheap and sell things when they're expensive. That's what supply and demand is all about. Okay? So I know now that any supply zones down here, I'm not allowed to sell. I'm not allowed to sell supply down here. It's not allowed. Okay? I also know that I'm not allowed to buy demand up here. Doesn't make sense. Why would I want to be buying when all the professional business owners are getting ready to offload their inventory? If you guys ever watch the Shark Tank, Raymond Jones isn't going to come up here and start buying his FUBU jeans from China at $10 when he can come and buy them at $3 and sell them at $10. You don't want to be buying the wrong places, guys. Now, I haven't talked about location. I've just talked about concept. Putting a context to where you want to be thinking about buying and selling in the marketplace. Knowing that, now we move to identifying structure. Okay? Is the market on your side in those areas? Assuming this is a day of oscillate. No, Terry, we're going to get into that after. Give me a second. I'll get there, buddy. Okay? So, we've identified area, but we haven't identified structure. Okay? Because structure tells a lot about who's controlling the market in those areas, right? You could be still down here, but sellers are still in control until buyers prove themselves, right? Like if you take a look down here, sellers were still in control right here. They were in control. Okay? Where they lost control, prices made a higher high. That's where the sellers lost their struggle. So as soon as we start seeing that structure is on your side, we can now start thinking like a buyer, a willing buyer. I want to be a willing buyer in demand after price proves itself. Price is starting to prove itself in the right areas of the daily auction. Buyers of the market. Remember, what are we waiting for? We're waiting for every other trader as a collective unit of buyers all around the world, hedge funds, money managers, retail traders, investors, all stepping in and saying, yep, we're going to push the market higher because there's now demand being proven. Most of the time, that's Wall Street, the big boys. Well, why would we want to start guessing? Let them show us. Let them show us. So when we do this, we now have our area of our grid. End of story. I'm going to put this over here for a second. We're just going to map this here. And I'm going to leave this here so that we can unfold this. Because now I know that I'm looking for two things. I want to be on the right side of the market context. And I want to know what structure is doing. Same thing up here. If we look at the supply side of it, let's move this down. Okay. If we take a look, let's go back here for a second. We know that this is the midpoint, so anything up here at the top would be seller's territory. Okay, well, take a look. Sellers started to prove price action here with a lower low. Do you notice how the demand zones up here don't really work that much? You know, so we didn't get a really big, we did get a reaction, but it wasn't a trade that's like, yeah, that's a winning trade. Good job. Or I followed my plan. That was a profitable morning. And that demand zone is not going to give you those mornings. And it's definitely not going to do so when you're making consecutive lower lows. Look, it broke the low again here. But pay attention now. Let's switch this back on to the other side. Okay. And think about this. If we're making lower lows in price and prices are trying to head down and we're up here at the expensive areas of the auction, okay, this is a supply zone, okay, right? Tug of war, red thrust bar, price goes into supply and it reacts properly because the zones, and I have the zones turned off because this was a big level of supply earlier, but this is the same concept. Supply works really well when price and auction are on your side. Demand works really well when price and auction are on your side. When you're trading in between the areas of indecision, where you're not really on the right side of the market, it's where traders are like, oh, God, it's just grinding its way to my profit target, or it just hit my stop. It didn't really go. It's because you're not in tune with the area. Give me a Y if that makes sense. See how prices are going down, but now we're here in a supply zone. Yes, you have structure, but you're starting to get into an area where buyers are going to step in likely. Now, here's the thing. Do you notice how we never had a low form yet right here at this price point? If we were coming in this morning in the European session and you're in Europe, I know there's a few of you in here, if you're in Europe and you're seeing this trend right now and you're like, okay, well, we're in a downtrend. I want to be selling. But we haven't really formed a low of day yet, or we don't really know where the auction is because we're just trending. Okay? This is important. There's a tool in here called the curve. Okay? The curve measures past auction structure. You notice how the bottom of this goes all the way back to that structure? It looks at, okay, watch what happens. This is an automatic structure grid that basically forms based off of price. Watch how it moves. It automatically moves. So let's just leave it here for a second. It creates a grid for you. Okay, it creates a grid for you. Now, if you're not in an area where you can use the overall auction of the day, you need to have the auction of the trend. Because sometimes the market's moving quickly and you have to act with the market. So we have a mini auction that's associated. It's called the curve. So you'll notice here it says retail, deep value, deep value. If we take a look at where we are on this trend, I can sell anything up here. And I'm definitely not buying anything if demand is down here because we haven't formed a low of day and we don't have structure on our side. There's no structure or there's no auction to show us where the low is yet. So we don't even have a trend. I'm just not a buyer. You just don't look for demand zones. Okay? That's the key. That's the real key. So let's take a look here. Price came down. Okay? I'm going to move these out of the way here because I don't want them to confuse us. Okay? So we don't have a low of day yet formed. And let's put broken zones on for a second. This is really critical, guys. Look, a new supply zone just formed. Let's go back one bar. A new supply zone just formed. Remember, there was a black candle, tug of war, and then it was followed by a red thrust bar. To an inexperienced trader, what happens, you get the shiny object syndrome where it's like, oh, the software just put an area. I know I'm supposed to sell and supply. I should sell. And they push the sell button, and then all of a sudden, it just takes them out. And you're like, what happened? Right? I know it. I knew it. I knew I was supposed to sell and supply. It didn't work. But this guy, Sean, on the webinar said he's sell and supply. No. What I'm telling you is that we're in a downtrend and we have not yet formed a low of day auction to show you where we're at. And we're using the grid here. Look where we're at. We're in buyer's territory. We're in value. We're not allowed to sell. At bare minimum, you could sell here. And your stop loss always goes a tick or two above. So your risk is super, super, super small. And if you're willing to take that risk, at least you're paying the price to pay on a very small stop out rather than a full-size takeaway trade. Right? That you can do. But here's the thing. Take a look at what happens up here. Where are we? Right? We're at the top of the grid. Right? We're at the top of the grid. And it hits supply. In a downtrend. Okay? Now forget this stuff here. Forget all this stuff here because we haven't formed that yet. We haven't formed the low. We just put the low in here, but we haven't really defined that yet because we don't have any change in structure. So we can short here. This is a short. That's a trade that's valid in the downtrend. Okay? Is everybody starting to see this? Give me a Y if you're starting to understand this a little bit, because we haven't even gone over the exact examples yet with the grid. I just want to show you the difference between what the auction tells you versus just if you're in a trend. Because sometimes you're not going to have a higher low of day to define your area. You have to go with the trend. In oscillating markets, no problem. You can define the high and low of the range easy, which really helps make it easy. Yeah, Kevin, I've got a couple trading rooms. That's the thing, right? I mean, I can show you the combine performance that I'm doing. I can show you Raul's broker statements. I mean, whatever you want, Kevin, I can show you. I can show you all that. Yeah, it's not a problem. We can show P&Ls, and we'll go over the equity curves after. Not a problem. If you want to see Raul's trading performance, mine from the combines, you want to see Michael's, not a problem. We'll show you all that. Right now, I want to teach the strategy. Okay? And we'll talk about performance at the end with Q&A. Not a problem. Okay? So what I want to do now is I want to say, okay, we formed the low. We came down, we came back down. You see that was a decent short from the supply, but now we formed a low. And look what happened. It basically, black candle, black candle, black candle, black candle. Remember we talked about that step one in the process before identifying supply or demand, and then all of a sudden we get, boom, a green thrust candle. At the close of that thrust candle, okay, at the close of that thrust candle, this demand zone will print because it proved that buyers are creating demand based off volume and order flow. Now, what's important, okay, what's really important is that we understand that we have to make a decision. Are we buying this demand zone or not? Because it's hit value, right? Who in here would think, we haven't yet formed a range yet of the higher low. One could say, okay, we formed a low, higher low. We have not yet changed direction. Who in here would say that this is allowed or not? Give me a Y if you think you could buy this demand zone or not. I'm going to test you guys. Based off what I said, structure and auction has to be on our side. And if you do not have auction, structure and the grid has to be on your side. And if you get it wrong, don't beat yourself up. That's why I'm here to teach you this. The answer is no. The answer is no. Remember what we said. Let me kind of go. Let me say this right. Look at this. We only buy the market in wholesale price levels with market structure on our side. Market structure on our side. Okay? If you don't have the auction theory, right, we need to use the curve. Remember, this is why we have the curve. We don't yet know this is the low of day yet until structure shifts. Sellers are still in control right here. This is very important stuff, guys. It applies to every trading system you will ever learn. If you cannot read the highs and lows of the market, you will never know who's in control of the market. That's why I get a little intense talking about it, because this is my passion and I want to make sure you understand it. It took me 10 years to master this stuff. Okay, and I'm still not as good as half the educators that were in our rooms teaching it. But I'm still qualified to show you how this works. Okay? Take a look at this high. Okay, take a look at this high. Have we taken out the structure? No. Therefore, the sellers are still controlling this market. Just because we formed a higher low does not mean structure is on our side. We have not yet proven that the buyers are taking out structure. They've made a higher high. Structure has changed. This demand zone is now in play in value. We don't know this is the low of day yet, but if you want to wrap your levels around it, you could, because we've now made a higher low with a structure change. Now you can see we have that. We don't really need the curve unless we get that in as an odds enhancer. Now you know where you're at in your grid. Does everybody understand that? We just went from not having an auction, okay, not having an option, to now being able to form our mapping of our business for the day. Now I can buy demand zones when structure is on my side. Okay. Let's turn on market replay. Okay, I'm going to speed this up a bit. I want to watch price action. That's a demand zone buyer, by the way, guys. That's a demand zone buy area. I'm not going to exit. I'm not going to enter this trade yet. I'm going to show you exactly what's happening. Okay. I'm going slow with this, guys, because I want you guys to see. I'm to put it up to 15, 20, maybe a little faster, 100. Stop. I'm going to stop. Okay. Now, Kevin said, what do you define a structure to be intact after breaking after how many ticks? You could use a factor of average true range, Kevin. For me personally, I just need to see structure changing. I don't really, I mean, because you can never gauge it. It's never exact every single time. So the best way you could do that, Kevin's asking a good point. Kevin wants to know if it breaks a structure right here by a couple ticks, is that still truly a structure change? By definition, right? Oh, I wasn't taking that trade. I'm going to take a different trade. We're going to show you a different thing. The goal here is to show you, okay, that even one tick above is a structure. If it makes a higher high in price, that tells us a story. It truly does. Even to a tick or two, it tells a story. Now, I would maybe give yourself a 3-tick grace. Maybe, I don't know, Kevin. It's really a preference. If you're looking for more confirmation, to me, the fact that it just took out the highs is enough confirmation for me. Okay. That's dependent, not necessarily, Joel, because we're not buying or selling the breakouts, guys. Remember this. This is where you guys got to untune the thinking of what you may be thinking of breakouts. We're not trying to confirm a breakout. We're trying to see who's shifting control of the market. Nobody was saying that we're waiting for price to break out a structure and then pull back to retest it on a buy. That's like if you're trying to trade this setup. If you're trying to trade a retest of support, then you need to see a close above and you need to see it come back down to test support. And this is where your thinking's coming from. Am I wrong, guys? Give me a why if this is where that thinking's coming from. Most people need to see a confirmation of a breakout. They want to get a valid enough move. We're not trading that. That's not this strategy. We're trading supply and demand where buyers are buying at cheap prices and selling at expensive. You just want to make sure that the buyers are at the store ready to buy. They just showed you that they showed up. They just walked in the door. And now they're saying, okay, give me a deal. I want to buy your stuff cheap. Does everybody understand the thinking around that? Remember I said earlier, let go of the stuff that you thought you knew about what I'm about to show you because it's not accurate. Okay, Tom says great stuff. It really is great stuff. I'm not breaking out. We're not trading breakouts. Breakouts are breakouts. You know, this is not a breakout. This is teaching you how to take a trading chart. Doesn't matter if it's Apple, Google, doesn't matter whatever you're looking at. You want to look at Forex, you want to look at futures. This is truly how you map out a business. Every market is a business. So if you're trading 3 markets, you're running 3 businesses. You get that, guys? It's very different thought process, very different mentality. Okay, so let's move on to the next opportunity. Okay, where are we now? We have bullish structure. So therefore, if we are up here and we have bullish structure, right? I just did that to make it easy so we don't waste time. Are we allowed to buy these demand zones? This is the strategy, guys. Like, I can sell you an indicator, but I want you to make a bunch of money using it. I don't want you to just buy a nice fancy object. You can go and buy 100 other indicators at 100 other webinars this month. That's your prerogative. I want you to call me back in a week from now and say, this is awesome. Because it is awesome, guys. Okay? I'm teaching you system rules right now. Then we're going to get into the actual setup. Okay, where to be buying and selling on the next valid trade. Okay, so take a look at what just happened. we've now mapped out new highs on the day, right? Can't use that anymore. Can't use that anymore because we no longer know which is the low and the high. We know the low is here. We just don't know how far is the grid now from the halfway point. So guess what we're doing? We're back to the curve. Okay? Those are in value. So that makes sense. We can start looking to buy those now. Makes sense? Because we're in an uptrend. And we have no high of day defined. So if you're in a trending market, you use the curve if you're still trading outside the high and low of the area. Because you have to know how to map out wholesale and retail price levels based off structure. That's the whole reason this is designed. Okay, let's map this down here. Let's press plate. Let's give it a second to load. Let's give it some price now. Let's stop for a second. Okay, let's go back. One price bar. I'm going to put broken zones. Where are we on the grid, guys? Can you buy that demand zone? I wouldn't say use the curve when previous high is exceeded. I say use the curve when you have no high or low of day to separate your auction. Because the curve is best used in trending markets when you have no high or low defined. If you're just going from one high or low, it still doesn't tell you anything about the daily context of where you're at. Institutions look at the daily movement and the daily area. It's why market profile exists. It's why volume profile exists. Day traders in their minute thinking look at leg to leg. Well, yes, exactly. On this one, Lee. Yes. On that one, yes. That's why I love traders, because we're all so darn technical that we all are right in our own little way. Let's go here. I'm going to fast forward this, guys, a little bit. Okay. Let's talk about this. We've now defined change in structure right here. Let's go back. Okay, I want to talk about this. That supply zone is in retail price levels. Okay. Do we have structure on our side? Are we making lower lows with lower highs? No, we're not. So therefore, we would not trade this supply. Oh, darn, it worked. That's okay. You do not trade those. Those are the ones that suck you in. Oh, I made money. Yes. The next time you take that, you lose all your money. That's not the goal here, guys. The goal here is to only trade valid setups on system rules. That's the goal, okay? So now what we're going to do is we're going to wait. Did it just take out a low? It made a lower high, and it just now formed a lower low. We now have structure. Took out the lows. Can we define the auction? Would you say that that's the high of day now? And that that's the low of day? Right? Let's map this out. Easy peasy, 50% off the 50-50 grid. Okay, let's just use that real simply. So there's the 50 grid. Okay, right there. So we've just mapped out our area. Okay. I'm doing this step by step, guys, because you do this and you learn how to do this. You're only taking the right trades. If I can teach you how to take the right trades every single time, it's going to change the way you trade, period. Okay. And you all answered, if I could show you how to make a lot more money, would you do it? This is it. Okay. Now, take a look. We went down with lower structure. We don't need to use the curve anymore, guys. We don't need the curve. Because we're in seller's territory after it's proven itself. Let's turn broken zones off for a second. And let's sum this down to 100. Okay. I want supply to form. Oh, wait. Demand looks like it's trying to form. Okay, let's stop right there. Okay. Are we buying this demand zone? Valerie says no. Tom says no. Richard says no. Terry says no. Okay. It's risky, Valerie says. It is risky. Look, this demand zone is half and half. The only valid place that you could buy this demand zone would be at this low volume node right here. That is the only place. But wait a second. You can't. Why not, guys? And this is where I'm tricking you. I'm really driving home this. This is where I'm really testing if you're paying attention. Let's go back. Has nothing to do with just the grid by itself. Market structure has to be on your side. Exactly, Richard. You're still making lower lows with price. You're not making higher highs with higher lows. You have no structure. Structure's down. Yes, you're in the grid, but you're not on the right side of the market. So here's the thing. This is what we call counter trend. Okay? And it might work for a little bit. You might catch a bounce, but you're not going to catch the trade like we did earlier here. You're not going to catch a trade that has the merit for a bigger move. Okay? So let's go in here and let's just define this again. You might catch a bounce. See how it popped up a bit? I'd really like to sell that supply zone. The only problem is it didn't get there. Imagine that. Sometimes you miss a trade from time to time. But at least we're positioning ourselves to sell a supply zone with negative structure at expensive business areas. That's when supply is expecting to work. That's when price gets up to areas near supply and it's going to react. Take a look. Now let me pause it. It came within one tick of supply, but it still fell like a knife. Do you guys get what I'm trying to say? When structure and grid is on your side, you're in a better position to trade like a professional business owner. Trading is a fancy name for buying low and selling high, or just understanding how to get a good deal in an auction. If you're a trader, you're always getting good deals. Think of it like that. If someone says, what do you do for them? I get good deals because you're smart. You think, where would I want to buy? Where would I? If you're buying a car and your friend says, well, I go to the auction, I buy cars and I get good deals on them all the time. You're like, oh, I want to do that. I want to make money. You don't go to the auction and buy a car overpriced. Right? Your buddy's going to say, no, you don't do that. I'm here to tell you, don't do that. Okay? So we're getting now down here to buyer's territory again. Am I wrong on that? So we have negative structure, but we're in buyer's territory. So hold on a second. There's a supply zone here. Can we trade this? Can we trade this? No. We don't have to use the curve, Richard, and I'll tell you why. Because we know our auction. If you want to put a level of extra odds enhancements on this, okay, if you truly want to do that, you could. But I'm still going to go off the daily auction as opposed to the trend auction. The daily auction has a bigger merit than the trend auction. Does that make sense? Technically, this retail area here is not actually allowed. For me, I'd want to be up here. Make sense? Because down here in this retail area, we're still in buyer's auction territory. Might be a little bit inflated, but it's still buyer's territory. Okay? So let me just kind of go with this for a second. I'm going to turn the curve off. I'll just leave it on. It doesn't hurt. But technically, we don't need the curve because we're in an auction where we can define the low and the high of the day. So let me stop. You see how it blew through it? You know, those are those chances where you might take them once in a while. I won't take them if I'm in this realm. I don't like to sell when buyers are at the auction. I only like to sell when you're at the right place to sell at the auction. And you notice how I always refer to it as an auction? It's because that's what the financial markets is. Years before, when they were on the pits, it was an auction. Just because we're behind computers doesn't change the business. Okay, so now hold on a second. What is our structure? Everybody answer that. What's our structure? Is our structure down or up? Everybody here says down. Yes, you're correct. And is that supply zone in seller's territory? I'm testing you guys step by step because if you're able to, it is in seller's territory. Look at this. We're in the seller's realm of the day. This is where sellers control the market. Okay, so this is where sellers control the market. Anything up here, sellers. Anything down here, buyers. Okay, so right here we get a supply zone. Are we allowed to sell this supply zone? Forget the curve. Think of the auction. Richard says yes. Alex says yes. My job is to teach you how to make money. I don't care if you're right or wrong on the questions. I want to correct them so that we learn. Okay? Of course we can sell this. Of course we can. We're in seller's territory. Now let's start talking about the rules to the trade setups. Demand zones. We buy demand zone with bullish structure. We've talked about structure. Okay. If price is trading at the lower 50% of the high of day or low of day auction, when high of day or low of day is not defined, use the curve. Same thing with sell. We want to sell supply zone with bearish structure and price is trading at the upper 50% of high day auction. Let me just highlight that. That's exactly what we just defined. We just defined that we have bearish structure. We just defined that we're at the upper part of the auction. We've just met the rules for this and that. We don't need curve because we can define the auction of the day. If you want to add the curve, what does curve do here? Oh, wow, it's at deep retail. That's extra odds enhancers. So what I've done is I've written a little bit of a note down here on odds enhancers. Curve, auction location. These are things that increase your probability as a trader trading this system. Number of black bars we'll talk about later. Expanded range candles, I like to look at the size of the thrust. So normally a big thrust like this big long extended range candle is a big thrust. That's a lot of sellers in there. This one's a decent sized thrust and the move out of that was pretty significant. So I want to look to be a willing seller here.
Order pending.
Okay. Now let's talk about this. Step 3. You remember how I said we have the trigger in the execution process, right? We've just spent the entire time talking about 1 and 2. Do you see how you need a framework to define a system? And that if you get steps 1 and 2 wrong, step 3 has the low probability of working. Does everybody understand that? If you get steps 1 and 2 wrong in the framework, step 3 is where you're most likely taking trades at a 50-50 chance. You're at the roulette table now, you're not the poker player. Okay, so let's map out risk and reward. Position sizing is dependent on you guys. Obviously, I don't know the size of accounts you have and your percentage risk tolerance. I'm not your money manager and I am not your CTA, so I'm not here to tell you you should trade 1 or 2 or 3 contracts. But we can help you understand where the likelihood of good entries and exits are based off of the software and market texture. So if I'm looking at this, okay, one of the good things about the software is that we have what we call an average stop loss calculator. It looks at every single zone on your chart and it tells you the average stop size. First touch is always max risk. So for me, I always like to look at max risk, 14 ticks. Okay. 64 to 75 is 11, a couple ticks above it. So I've got a 15 tick stop on this ATM. So what I want to do is I want to talk about, okay, well, if I'm going to take a short here, remember I said sniper? Remember I said being a sniper? I like to enter at the low volume nodes. So if you're an experienced trader, you could
order pending,
scale in at the low volume nodes. If it does come deeper into the zone to fill more order flow, it's going to reduce your cost average. If you're a new trader and you just want to get good at taking trades,
order canceled.
If you're a very risk adverse trader and you only want to have minimum risk, you might not get filled, but you will have less risk if the trade holds on and it works. For me, I like to always enter at the low volume node coming into the zone. If you have the ability to trade more contracts, you can scale. It's a decision you have to make. Okay. But if we know this now, okay, if we know this, okay, let's take a look at this. This is really key, guys. And I always put my stop a couple ticks above. Let's map out risk and reward. If you want to look at that, it's a very simple concept around that. Risk and reward is a concept around that. We don't have any demand zones down here other than way down here for a target. So if you say, well, where am I placing my entry? Where's my stop loss? Where's my target objectives? Where is my trade planning skills coming in here? Right? And here, I was at 100 speed on that. So basically, you have a lot of time from the time it blew that stop or blew that supply zone to come up here. You have a lot of time to plan that zone. That's what I talked about, planning in advance. You know exactly what you're doing as a business owner before you get there. You're planning how much you're risking, where you want to sell your business, right? That's what you want to do. Now, as somebody that's been looking at markets for 10 years, I'm going to just move this over a little bit, and I want to talk a little bit about reading past structure, because if you really want to get down to it, risk and reward is only good if you understand the market. You could have all the risk and reward models you want all day long. I know traders that make a lot of money that would tell you that risk and reward is for, well, I just don't want to get extreme, but let's just say that it's not necessary unless you understand your market. You could say, I'm going to have a 2-to-1 target and have a demand zone in the middle here that's not allowing it, or have market structure that's not allowing it. I'm going to put a little line in the sand. You see this high that broke out over here? I'm going to put a little circle here. This area right here. Okay? That's a market structure level of support. That's way back here that the new trader might not see that. But I'm going to draw that, and I'm going to move it up just a little bit right there, because you can see how price stalled out at that area as it broke out. And normally, support and resistance, Kevin, we're not talking about profile in this webinar. Okay, buddy? This is a supply and demand webinar. So normally when you get these support and resistance areas, I like to basically map them out as an area around average true range, right? So if we look at the average risk around these zones, about 15 ticks. So I'd probably go about 8 ticks above that and 8 ticks below that as the area. So let's just map this out here about that. So I'm just estimating the area, guys. So what I would do is that would be my further out target. You see what I've done there? I've mapped out where I expect the market to stop if I get short here. Now that comes with a bit of experience, but for the most part, you could set your risk and reward targets if you choose to. I'm going to just speed this up just a little bit.
Order filled.
We're going to stop. Okay. Now let's talk about this. I'm going to move the curve out here so it's not confusing. Okay, where's my target? I got my first one at a risk and reward of 15 ticks. I'm just going to move this up a little bit so I don't get greedy. See my stop loss over here? Just like that. Does everybody see what I've done now? I'm in a supply zone. Caesar says, on a big picture, we did not make a new low. I don't know what you're looking at in terms of big picture. I'm looking at this chart on this structure. As a day trader, if you're looking at all these different time frames, a lot of times that can be very, very difficult to time that. For me, the auction, at my chart, Caesar, we are making lower lows. low to a low. We have not made a higher high. It is a lower low and a lower high right here. Right there. Let's turn off the zones. You'll see it. Right there was the lower high. We made a lower low. We came back up to supply. So my analysis is accurate here. Okay, so we're into supply. In the auction at the seller's territory. Okay. High of days here, low of days here. We're in retail price levels. I'm not a big fan of runners.
Target filled.
I'm not a big fan of runners. And I'll explain that later. We'll talk about it. See what just happened? Price came down, filled that target. It reacted out of supply. Why did supply work? Because we're at the right location in the right area of the auction. You only need a couple trades a day in the right locations to be very, very wealthy as a successful trader. Just a couple trades. You don't need to even trade a whole lot of markets, 2 or 3 markets once you get comfortable using this. Okay? And if you're wondering, well, which market time frame should I use? Well, go off your risk. If a 14-tick stop only allows you to trade 1 contract and you want 2 targets, well, then maybe you need to drop your time frame down to a smaller time frame. The same concept exists, guys. It just, you might have a little bit bigger zones, maybe a bit bigger trades. This is how supply and demand works. Okay? This is truly how supply and demand works. So, let's see if it hits second.
Filled.
Where did it stop? It stopped at support. Okay? Now, that is how you trade supply and demand. It's about 44 volume. I can tell you the equivalent to this. So you're looking at between a 5 and an 8 minute chart. Yeah, it's between a 5 and an 8 minute chart. Closer to 5 than 8. So this is equivalent to a 5-minute chart of crude oil. About there. Does everybody understand what we just talked about? I threw a whole bunch of information at you. Did that make sense to you? That is the money trade. It's the money trade. Just like this was the money trade. It broke structure in demand areas of the auction, came deep into demand, and it pushed out. So out of all of this move from here to here, the only 2 valid trades today on this time frame based off this system was right here off the open and right here going into lunch. 2 trades. Both winners, and you stayed out of a whole bunch of losers. Now you say, well, that might not be enough. Well, then move your time frames down. And now, can I ask you guys a couple questions? Did anybody understand that 100% fully? Give me a Y if you understand this. This is a full-blown trading system. This is something that we could do a group coaching program and charge thousands of dollars, all that stuff. No. I want you making money. I want you using the software. I want you being comfortable with it. I want you to understand it. That will make me happy. This is one of my favorite products. It was our flagship product at the inception of the company. It is still one of our top-selling tools. Exactly, Terry. You need the experience. And that's why this video exists. That's why this rules existed. I took the time to write all this down. Okay? And basically, it's the simplest thing once you understand it. Are you on the right side of the auction? And are you on the right side of directional structure? If so, you're either buying demand or you're selling supply. Did you learn anything? Give me a Y if you learned anything. If you own the supply and demand zones already, I'll give you the system. You're a valued customer of ours. I'll give you the system. I just want you to be. I want you to be successful. That's it. No hidden agenda. No catches. We have lots of traders all over the world, and I'm really tired of hearing people struggle. So I've dedicated my life to helping traders make a lot of money. Okay? So who in here is not currently an owner of the SDVolumeZones? Who in here does not own it? Give me an N if you do not own it. If you do not own it, give me an N. Just type N in the chat box if you do not own the software. Okay. So let me just kind of talk a little bit about our type of people. Okay. Let me talk a little bit about the types of people that you're dealing with. Okay. I'm just going to do a few things here. I'm going to, for all those people in here that don't know us, there's a lot of new people. For those of you that know me and know us, sit tight. We'll get to the end of the webinar. It is recorded, Lawrence. Yeah. I'm going to disconnect from this, and I want to just... I only get a chance to literally trade maybe a couple hours a week. I'm the owner of the company, and with that comes responsibilities of software, staff, market testing, beta testing, bug testing, trade room education, you name it. I have to make sure that everything runs the way it needs to be. So you say, Sean, do you make money as a trader? I have to pick and choose what I do as a business owner. But what I've decided to do, just to help make sure everybody's happy, I'm working with Top Step Trader right now, going through their combines so that I can show traders how to become funded traders with their prop firm. And one of our other trade room moderators is also doing that. And the reason we're doing that is to show that that you have qualified traders to teach you what's going on, because they have some of the most restrictive risk management parameters in the business. If you can go through their combines, there's no doubt in my mind you can be a really successful trader. So Michael and I are in the combines. Raul trades a very large account. Okay, Raul trades a very large account. So what I'm doing is I'm just going to connect. I'm going to connect to the combines. I started trading this maybe February. Let's see, the wrong one here. So I'm up a couple thousand. I had a little bit of a drawdown earlier this week. I had a tough day earlier this week. But let me just go in here. And there's a big lesson to learn about that tough day, and we'll talk about that another time. So we'll go here. I started trading this. Okay. So this has been me since I started the combines. Well, Greg, let me kind of explain this, Greg. We're a two-focused business. So Greg's saying it's a little overwhelming. You have a lot of software, and I'm a little confused as to what you do. We're traders, first of all. Second of all, we have two focuses. Number one is we sell very high-end software to financial traders. A lot of hedge funds buy our software. Money managers buy our software. We've got very high net worth traders that buy our software because we design very expensive but very advanced software that does very, very good stuff in the market, right? We don't design rudimentary indicators. Second, we run trading rooms and education. So a lot of experienced traders don't need our trading rooms, and they're already making a lot of money, but they like our tools. A lot of other traders that don't succeed, they come to us because they want to learn how to trade the way that some of our educators trade and join our trading rooms. And then we use software for that, right? So you can buy our software if you choose to. Right, Greg? So it depends on basically who you are in that mix. If you're an experienced trader and you're just looking to buy tools, great, we've got the software for you. If you're somebody that's struggling and you want to learn how to trade, well, we've got those resources for you as well. Right? We cater both sides of the business because we're an established, very big company. Okay? We are adding that soon, Lee. Send me an email. I'll give you details on that. Lee's asking stuff about cryptocurrencies. I can't spend today talking about that, but we'll talk about that after. Okay? Some big things coming here, guys. Some exciting stuff. I just hired a fund manager to run our crypto arm. So we're going to have a crypto trading room as well running, and we're going to be teaching education on that. But we'll talk about that after. Okay. So this has been basically the past month and a half of trading. I've only had, let's see here. Let's go here to analysis and let's go to trades. Give me a second. Actually, no, let's go here to analysis. Let's just go to monthly. Like, let's go here to trades. Give me a second here. Day of week, right? So you'll notice that I trade periodically through every day. Okay. I trade periodically through every day. You know, hour of day. Most of my trades are done here or here, depending on when I can trade, right? But this is the combines. So, you know, basically, this is my weekly P&L. So over the past, you see 1, 2, 3, 4, 5, 6, 7, 8. Like this is just trading 2 contracts, by the way, guys. I'm only trading 2 lots. So this is very, very small size. Okay, very, very small size. And if you, I have a, you know, if you really want to get into it, you know, I mean, I'm up pretty decent trading 2 lots. Top especially cut off on display. Can everybody see that? That's because I have the clean version, I think, on here. How about that? Does that work? Good now? Yeah. So basically, I mean, is it perfect? No. Can I do better? Yes. Do I essentially, how do I say this? Do I have the time to trade full time? No, I don't. And I'm not an educator in the room full time like Raul and Michael, so their focus is very different than mine. So this is basically to show you that anybody can come in here with a couple contracts and grind their way to some profits, right? You know, if I really want to get into it, you know, it's it really just depends on what your goals are, right? When we go in here and we basically, let me just show you this for a second. I have a couple questions on our educators. And the reason I'm showing you performance first here, guys, is because we've taken a very big direction on how we want traders to understand what we do. Anybody that teaches our trading rooms has to post their performance, sim or live, whatever it is they're trading in front of you. Ultimately, they need to be transparent. Raul is trading a much larger account than most people. He's trading a $250,000 account. All of his broker statements are here on the website. He trades market profile and he trades supply and demand. He uses his software, our software together, and he's a market profile supply and demand trader. Okay? His broker statements are here. That's last month's statement. He made $52,000 realized profit from Phillip Capital last year. Can you guys hear me? Give me a Y if you hear my voice. Someone said no sound. Everybody can hear me. Perfect. So these are his broker statements. If anybody in here wants to debate he's making money trading, well, just go here and look at the last 3 years of broker statements. Should answer your question. Michael's in the combines. Michael's trading the sim combines. He's in funding prep. He's trading small size, grinding his way to funded trading on a prop firm status to show traders that anybody can pass the combine if you follow the right strategies using the right tools. So Michael's an order flow and supply and demand trader. Today, I taught you supply and demand trading. Everybody that you talk to here or that is here to represent what we're doing needs to know what they're doing, or we would not have a business, right? We're not just marketers, we're traders. Okay, does that make sense, guys? So let me kind of go in here and kind of end with this, because I think performance is very big on people's mind. They want to know, hey, are you really good at this, or can I actually do this? Yes, you can. And I asked earlier if you're struggling, and everybody that said they were was honest. So everybody in here that said they're not owners of the software, we have a promotion going on, and I'm going to explain it. Okay. And basically, we have 3 options for you. Okay, a little busy slide, but let me explain it. We have lifetime licenses on our software, or we have quarterly or monthly subscriptions. Some of you don't like paying monthly subscriptions. I get it. We have lifetime licenses. Some of you are like, I'm not really sure. My budget's a little tight. I don't know whether or not I can afford a lifetime license right now. And I really don't know if I can do this. I just want to get started. Well, then you could go with a monthly subscription. If you're somebody that is, wanting to come and join our trading rooms for a couple months and you want to give it an honest go and you really want to be a part of a community, then sign up to a quarterly subscription. Now, here's the cool thing. If you take a subscription and in 2 weeks you say, this is amazing, this is awesome, I can't believe I wasn't using this before, and you want to buy the lifetime license so that you're not having to pay continuous costs, right? We'll credit what you paid on your subscription on the first month over to your lifetime. So you have a month to decide if you want to stop paying subscriptions and buy it outright. Gives you at least a month to test it at low cost. It's really your choice. But, you have options. Now, somebody in here asked me about support. I have support on staff. It's not me. I have a full-time support hand who just spends all day, who's developed over 1,500 indicators for NinjaTrader. He's an experienced developer, and he runs support for 3 other companies. He's a machine. So we handle support no problem. And also, it comes with user manuals, training videos, and we'll give you 1 free week in our trading room. So we have 2 rooms running. You'll get access to both rooms from Monday to Thursday. So you'll have 4 days for free in the trading room. Both rooms use supply and demand. Okay? Plus, here's what I'm going to do for you. I'm going to give you this entire trading system, which I could be charging thousands of dollars for because this is 10 years of my experience. I just want you making money. If you make money out the gates with this and you're using our indicators, you're going to join our trading rooms and you're going to buy more of our software because, let's face it, we are one of the best in the business. So it's about being humble and giving it forward first. Join what we're doing and see if you like it, right? But we've got real traders helping real traders. We've got about 1,000 traders that are in our network. Okay? So with that being said, I'm going to put a link in the chat box. Give me 1 second here. Okay, I'll do this, and I'm going to put a link in the chat box, and then I'm going to open it up for questions. Make sure you use the coupon code. Whatever choice you decide, okay, whatever choice you decide, all of the details are here. Okay, very straightforward. Give me a Y if you get the link and you can see it. If I did a good enough job teaching you today and I showed you how this works, you'll invest with us. If you're not serious about what I just showed you today, then understandably, we may not just be the right fit for you, but I can truly tell you this is how supply and demand works. If you already own the SDVolumeZones software, send an email and say, Sean said that we can have the SDVolumeZones strategy. I am an SDVolumeZones customer. We will verify you're a customer in our back end and we will send it to you free of charge. That's the type of stuff you can expect from us as a customer. So anybody in here that's non-purchased or non-customer of ours, we do that type of stuff. We help people. We pay it forward. So how many of you guys had a good time today? I think that's about it. It runs on Ninja. Yeah, it's Ninja designed. We will be in TradeStation very soon. I'm beta testing the final version of TradeStation for the SDVolumeZones, and we'll be moving over to TradeStation soon. You do not need an account with Ninja. You can use their free SIM accounts and execute on your other time frames. Yeah, if you own other software of ours, then you can purchase the SDVolumeZones, right? So soon, Joel, soon. We're coming soon, buddy. I've been working with TradeStation developers for a while. We're almost over there. We've almost got our SDVolumeZones and our market profile software ready for TradeStation. It's been long overdue. However, we are available for Ninja now. So how many of you guys in here are Ninja users? Give me a Y that do not own this. I want to know who's ready right now, because ultimately I would like to identify if you guys are serious or not. How many of you guys think this is what you're looking for? Give me a Y if you think this is what you're looking for and you can run with this. Jeff, I'm going to post a link in the chat box. All you got to do is put a link in. It's in the chat box. Let me know if you see it, buddy. Even if you're trading on TradeStation, you can run the sim accounts on Ninja, load the software, and use it for your analysis. You can pay for the software in a day or two, or even, it depends on how much capital you're trading with, right? But, and we'll send you, if you buy the software, or if you own the software already, I'll give you the system. It's my work, hey guys. This is my brain. This is basically my experience I'm giving you. Normally when people buy indicators, they just get a user manual. I'm giving you a full-blown trading system out the gates, built and used by trading specialists, if you will. And I am a supply and demand specialist. That's something I can say that I am. I designed the architecture, over 20,000 lines of code. I didn't code it, but I designed it. Yeah, it's available for Ninja 7 and Ninja 8. Yep. Does everybody see the link? Is there any last minute questions here, guys? I know we're getting a bit extended here, and I still need to render that video and get it. Don't see a link. Go to where and please use Zoom. Yeah, I can't use Zoom, Jeff. I'm not using Zoom. We're using GoToWebinar. The link is in the chat box. So if you want to zoom this out here a little bit. So I'll highlight this. It's okay. It's available for Ninja 7 or Ninja 8. I use Ninja 8. I have had no issues with Ninja 8. Yep, when upgrading, no, if you upgrade after month 1, it's full price. You got a month to decide if you want to upgrade, and all the prices reflect in the first month 26% off. So if you're paying a monthly subscription at 26% off, so you get $197 on a monthly subscription, take away 26%. If in 2 weeks you want to upgrade, you just upgrade at the 26% discounted lifetime license, right? And I'll go over and I'll explain that. Right, so if you're upgrading to this cost, $11.06, not $14.95. You're getting $388 off. When will you send the recording? We'll be sending out the recording probably tomorrow morning. Yeah. I'm going to go to the gym tonight and get some exercise, and then start things off again early morning. All right, guys. Well, I think I've done my fair share of talking. I want to save the voice for the next time, and I really enjoyed being here. Hopefully you enjoyed the time it took to put that together. I enjoy this. This is something that I really looked forward to teaching, because it's how supply and demand makes money. Good money. There's a lot of other ways to trade. This is the real meat. No problem, Steven. I knew you'd like that one. If we buy the Ninja, will we then be able to switch to TradeStation for free? Lawrence, that's a good question. I haven't had that discussion with our team, and I'm very transparent about that. We haven't mapped out our pricing because we're still waiting to get in touch with the App Store developers over there. But we'll definitely make sure that you're taken care of. We're not here to gouge anybody. No. So, and we'd love to have you in our trade rooms, or at least using the tools until we're over there, and then we'll find a way to help you out. All right, guys. So enjoy the rest of your evening, friends or family, or if it's the morning, depending on your time zone. And we'll get this over to you. And thanks, guys. Enjoy your evening. Take care.